Hey everybody, this is Ryan Mallory and we're going to do a stock market update. Are we crashing again? Is this a repeat of what we saw in February of March? Are we just starting to see the ball roll back down the hill? We're going to get into that and more in this particular update. I'm going to go through all the charts. I'm going to go through all the time frame. I'm going to lay out exactly what the market's doing and whether or not you should be concerned about the stock market heading into next week. First off, you had Apple and you had Tesla with some significant drops on the week. Obviously, you had the big Monday run-up that happened post-split. Everybody was excited. Everybody thought this thing was just going to go right back up to their pre-split prices, which it was never going to do. And you weren't getting the stocks any cheaper, but people felt that way. But then reality set in, and then all of a sudden, Wednesday, Thursday, and Friday for Apple, and Tuesday through Friday for Tesla, these stocks had a huge pullback. And with it, it started pulling the market down. Then you started seeing the profit taking in the FAANG stocks as well. And as a result, the entire tech sector saw this very dramatic pullback in the market, leading the entire market much lower. But I'll say this, even though that we had some significant selling, that 80-point rally off of the lows of the day on Friday really saved this market from experiencing some severe technical damage. Right now, very little technical damage being done to the charts, but there is some damage nonetheless. First off, let's take the SPY chart here. This is the S&P 500 ETF. It's really one of the best ways to track the S&P 500 because it takes into account the gaps that happen overnight. Now, in 1 week, we dropped below the 5, the 10, and the 20-day moving average. Before then, it was very difficult to see any kind of close below those moving averages. And for the 20-day moving average, it hadn't happened since June. So there is a little bit of a change in character in the chart. However, the trend line that I am watching the closest goes all the way back to April here. And so far, this thing is holding up like a champ. It tested it perfectly, and then it bounced immediately higher. So there is a possible case that this is just a 2-day pullback, because as long as that trend line holds, we'll continue to push higher. So watch this trend line here, because I do think it's one of the most important trend lines in the stock market right now. So as a result, on the daily chart of the S&P 500, I don't see a lot of technical damage there just yet. Now, when you take the weekly chart going all the way back to 2013, the picture is much different. And that's a bit of a concern because you have this huge overhead resistance level on the chart, and it broke through it temporarily on Monday and Tuesday of this past week, and then it saw an immediate sell-off. Very much so like what we saw back in February. Except the one in February, we've already seen how it played out, and it played out in a very significant way. But you also have a significant trend line underneath all of the price action, and that also goes back to 2013. And while we saw a rejection at resistance earlier this year, it actually pulled back and went all the way back below this rising trend line and then immediately bounced back up. So it didn't spend a lot of time, so I still think that there's a lot of significance behind this trend line. So the bearish case here is that we've seen price get rejected at resistance above and that it'll pull back to this rising trend line. I'm not quite ready to say that yet. I need to see some follow through this week, because the one thing that has been certain throughout this entire market rally is very difficult to get back-to-back weeks of selling of any kind of significance. In fact, that hasn't happened yet. We've had a 2-week sell-off, but it was very insignificant in the grand scheme of things. So note the resistance above, note the support underneath, and that should be our guide here going forward, depending on can this market continue to push higher with that resistance above it. But guys, it's not just the weekly that we should be concerned about. Look at the monthly chart. Again, huge overhead resistance weighing on the S&P 500. You go all the way back to 2003, and what we saw is the same thing that we saw back in February of this year when the market peaked, and that is it busted above the resistance level but could not sustain that movement and saw a sharp rejection. We saw that this past week. We break above the resistance level, but we could not sustain it, and as a result, we saw a very sharp sell-off over the course of 2 days. Now, how does that translate in the next week? I don't know, but I would make sure that I am raising my stop losses and protecting profits, because at this point, in this stage of the rally, yes, it is extremely overbought. We're hardly anywhere near being oversold. In fact, on the monthly chart, we're as overbought as can be. So be careful at these levels and make sure that if the market does want to take a dump here, that you're not getting taken down with it. Now, for the Nasdaq on the daily chart, it is going to be absolutely critical that it breaks back above the 20-day moving average. It's not that it can't break below the 20-day moving average, but it doesn't stay below the 20-day moving average. So while it closed below it at the end of last week and even tested the 50-day moving average before seeing a remarkable bounce, this thing is not out of the woods yet. You're seeing increased buying, which tells you that there is a lot of people starting to book profits in the market right now and take a more conservative route with their portfolios. And no, it's not uncommon for the stock market to hit all-time highs and see a significant sell-off. In fact, that's what we did back in February. We saw a huge sell-off after making all-time highs the day before. So is it out of the blue that we could go right back down again? I don't know if we'll touch the March lows. Maybe we do. But I do think that there is a very strong possibility here that we see continued profit taking in the week ahead. As for the weekly chart, it didn't even lose all the gains from the previous week. To get short here and say, okay, the top is in, we're going straight back down, it's too soon for that. I'm not going to be doing that at this point. I'm holding off. I'll let the market come to me and decide when I'm going to get short, if I'll get short. Now look, I've showed you this chart before. It is an absolute bubble. When this bubble pops, I'm not sure. Did it pop last week? Maybe. But this thing dwarfs anything that we saw during the Nasdaq Dotcom Bubble. And now look at the volume that we are seeing pile into the Nasdaq here. This is because your retail traders are piling into the market at a record pace. A lot of that's being aided by free commissions. A lot of that's with the stimulus checks, making more money not working than working. A lot of this is playing into it, and it's creating a bubble effect for the market that the Federal Reserve is actually trying to help and not hinder. But the volume levels are amazing. They're insane, really, and they should be a very big concern that there is that much hype flowing into the market right now. Hey, and before I forget here, make sure to check out my YouTube membership. It's a feature on this channel that goes above and beyond my weekly videos and actually focuses on a lot of additional charts from the FAANG stocks being updated once a week, as well as Microsoft and Tesla. You also get 2 additional market updates, and you get access to my private indicator for market reversals. And on top of that, you can also get access to my watch lists and some of the most intriguing charts that I come across each and every day. So make sure to click down below where it says the join button and subscribe. Now, speaking of monthly charts, the Russell Index is the one indice that has really lagged the overall market price action. It's not making new all-time highs, and that's largely because there's no FAANG stocks in the Russell 2000. They only have small cap stocks. And what you have is you have a retest of this whole double top going on here where it confirmed that, and it's stuck in a lot of consolidation right now, and that's where you're starting to see its first red candle on the monthly chart starting to form. Maybe it doesn't close out in the red on the month of September. However, it's starting off that way, and you have that double top that is still in play, and you still have a series of lower highs in place. So keep an eye on this chart, because this is probably your truest indicator of the stock market right now, because it's the one index that has no FAANG stocks in it right now. On the weekly, it's the same thing. There's a lot of choppiness and resistance right here at its current price level, so it's going to be hard for it to break through, say, that 160 level and really sustain a move to new all-time highs. And even more so, it's probably the one index that has sustained perhaps the most damage here. It was consolidating for about 3 weeks, and it broke below that consolidation. Even more evident when you pull it up on the daily chart, you have a little bit of a short-term double top there that it has confirmed, and it could see a move back down into the 140s. Now let's get into the volatility index, the VIX as we like to call it. Biggest pop that we have seen since that June 11th sell-off in the S&P 500. But like that sell-off, the following day it couldn't sustain the momentum. Not like what we saw back in February and March, where it kept building upon itself each and every day. Now the VIX started giving us some clues about this on Wednesday when the market was just taking off. And it was really doing it for no reason, but the VIX was climbing with it as well. It was a real weird anomaly there for that much of a price gain for the VIX to be up that much on that particular day. Nonetheless, it was foreshadowing what we saw Thursday and Friday. So right now the VIX, it needs to erase the loss that it took on Friday, and it needs to keep marching higher. Otherwise, this sell-off is dead in the water. You also have some intriguing resistance here going back to April, where the VIX has been rejected each and every time that it has been tested at it. So if it does break through this resistance, that might be your opportunity to start getting more bearish on the overall market. I'd like to say that I'm surprised by the fact that the market rallied on Friday off the lows. I'm not, because the dip buying is one of those things that's not going to just instantly go away. They're going to have to fail many, many times and get burned many, many times. The algorithms are going to have to change their way of doing business here, because right now, anytime you're going to get a sell-off, they're just going to keep buying. You're starting to see some weakness in their trading, but they're not just going to completely abandon ship here, especially not after what we saw on Friday. They still want to keep buying the dip. The retailers want to keep buying the dip. Retailers still want to keep buying Apple, and they still want to keep buying Tesla with the hope that the show and the party is not over. But their confidence is shook. So the bears have it in their court next week to really put the fear of God in these people and drive this market lower. And if they're not able to do that, then I would say that the market's just going to go right back up to all-time highs, probably by the end of next week or the week thereafter. Now, my goal when I do these videos is not to be like a negative Nancy or to scare you into thinking that something bad is going to happen. There's plenty of charlatans out there that'll do that, okay, for you. I'm not one of those. I'm going to tell you where I find the risk at. I'm one of the only people that do it. I'm using my experience over the years as a trader to outline the support, the resistance, what you need to be looking for going forward. And I want you to be concerned the most with risk. If you concern yourself with the risk, the profits always take care of themselves. I almost say that in every video and podcast I've ever done. But you got to concern yourself with the risk first and foremost, because once you do that, the profits will come. And remember, your trading success is not going to boil down to a Tesla or to an Apple. It's going to be a history of making good trading decisions, of not blowing up your capital, managing the risk, taking profits, and knowing when to be patient. Thank you for watching this video. Make sure that you tell me in the comments below, did you sell some of your positions this week? Are you raising your stop losses? Are you getting nervous about the stock market? Let me know. I want to hear about it because I learn from you just like you learn from me. And make sure to like this video. It helps me out. And subscribe so you can get all the notifications when I do post new videos. I do about 2 of them a week right now. I flirt with the idea of doing 3. For now, it's 2, but who knows what the future holds. Thank you, and God bless.